and welcome to the Eastern Caribbean Central Bank's Business Symposium as one of the highlights of its Financial Information Month celebrations. For the record, my name is Keith Johnson, and I am the Managing Director of Republic Bank Grenada Limited. And when Linda called me a few weeks ago and asked me to be the chairman for tonight's symposium, I was a little hesitant. But then she reminded me that I actually did this job a couple of years ago. So on those grounds, I could not refuse. So welcome again, and I'm very pleased to see so many of you here. I suspect we'll have some more persons coming in a little later. But for now, we'll make a start. And just to make sure we start on the right foot, we'll have a word of prayer and thanksgiving, seeing tomorrow's Thanksgiving Day. And I ask one of my colleagues from CIBCFCIB, Mrs. Walters, what's your first name? Mrs. Lucy Walters. I can't even understand my own handwriting. So lead us in a word of prayer.
Okay, good evening to everyone. Shall we all stand? Our heavenly and most gracious Father, we are indeed grateful to you for bringing us here safely. God, we pray for those who are on their way, that you would help them to get here safely as well. And God, we pray for tonight's proceedings, that it will be done in an orderly manner. And God, we pray for the discussants and the presenters, that you would help them to deliver in a way that we can all understand. So God, we just ask your blessings upon everything that will be said and done. In Jesus' name I pray. Amen.
Thank you very much, Lucy. And with that start, I'm very confident that we'll have a very successful symposium. So first, I want to congratulate the Eastern Caribbean Central Bank, and in particular the Grenada agency, for organizing this symposium. It is titled Plan for Uncertainty, Make Insurance Your Priority. And that is always a very important financial topic for discussion. And you will hear more about that in the two presentations. But the theme also highlights the fact that we are always surrounded by risk, and any decision we make has some risk attached to it. In fact, even when we don't make decisions, there's risk attached. And the role that insurance plays is to mitigate the risk. But as I said, you'll hear more about that from the experts. And in fact, our two sets of panels of moderators, presenters, and discussants are, you can consider, high-powered. They are leaders in the financial industry, and in fact, it covers almost the entire gamut of financial services, starting with bankers, and in no particular order. Bankers, insurance representatives, insurance executives, retired bankers, somebody from the legal fraternity, somebody from the regulators, as in a GARFIN representative, persons from other aspects of financing, as in construction. So we have, as I said, a very high-powered team this evening, or two teams, and I expect they will do the theme justice. Now, we did start a little late, and I would like to apologize on behalf of the ECCB. But there were some persons who were here quite early, and I actually have a prize for the person who was here first. No, it wasn't me, so I can't reward myself, But I'm sure among you, you can recognize who was here first, or you would know who was the person that got here first. You were here? So my good friend and colleague from RBTT, Vaughn, and as we are in Financial Information Month, the prize is actually financial. So I was speaking just now about making choices and making decisions, and Vaughn is going to be put in the spot to make a decision. So the prize I have for him is a choice between an old $20 and a new one. Which one would you choose, Vaughn?
New $20.
No. Well, come right up. But note well, I did not say a new $20. I said an old $20 or a new one.
Oh.
So, to make sure I have it right, a brand new one. There you go. Congratulations.
Thank you very much.
So you see this thing about making decisions and risk involved, right? Good. So our first session is rated PG, not for parental guidance, but because the presenter is PG, as in Phillip Gittens. The moderator for the session is the early bird, who got a little more than a worm. My colleague from RBTT, my fellow banker, Vaughan Braffett, who is the manager of business products and transformation services, transactional services. Well, more or less the same, because a transaction transforms you, right? So, without further ado, I will now turn the session over to the moderator, Vaughan Braffett. Thank you very much.
Okay, thank you, Keith, and thanks again. All right, well, you already said my name, so I don't have to say it again. All right, so the first presentation is Preparing for Uncertainty, Financial Tools to Help You Protect Everyone and Everything You Care About. All right, and the main presenter is Mr. Phillip Gittens, the insurance manager of Antillean Insurance. And we have a number of discussants who will be Mr. Belmar, going from that's right to left. Yeah, Mr. Belmar, Mr. Leslie Barry, and Mr. Louis Williams. And Mr. Belmar is from the Belmar Brokerage Services. Mr. Louis Williams is from the National Insurance Scheme. And Mr. Barry is from Barry's Engineering Company Limited. So let me just give you a little bio on Mr. Gittens. I won't make it too long. I'll be very short. Mr. Phillip Edward Arthur Gittens is the Operation Manager of Antillean General Insurance Company Limited. He joined the company in December 2016. He has a BSc in accounting from Binghamton University in New York, USA. He has held various management positions with various companies since his return to Grenada in 1997. He entered the industry in 1998, where he assisted British American Insurance Company Limited, EC Division, as a financial analyst. He later became an insurance broker. He has consulted with various insurance companies over the years on various finance-related projects. So at this point in time, I would like to invite Mr. Gittens to come and do his presentation. Thank you very much.
Thank you, Braff. Good evening, everyone. I didn't hear a protocol established, so I will lead into thanking Eastern Caribbean Central Bank for inviting us here to do this presentation along with my colleagues. Their theme for the month is financial empowerment through education. And they've asked us to talk about preparing for uncertainty. And I believe my colleagues on the other table are going to deal with recovery. Preparing for uncertainty. What is that? Right, so I see the technology is not working the way I expected it, but we will use it anyway. Right? So I want to talk to the importance of preparing for life. because events happen while you're living. Yeah? What events? Losses occur. Protection from financial loss. Those are some of the things that you're going to encounter in life. But you're going to have to do something about it. Dependencies. When the main breadwinner of a household passes on, what happens to the household? Some form of income protection. Uncertainty of life. Disability. Stress. Disaster. Do we recognize those as events of life and uncertainty? So what are some of life's events and uncertainties? All right, the technology is not working as nicely as I would expect it. And the reason I inserted life events is because there are a series of things that happen while we're living. Right? Fire. You don't have a plan for that, but it happens. Prolonged illness. How do you protect against that? How do you plan for that? All right. If you want to start a family, that's something you could plan for easily. Death of the breadwinner, divorce, robbery, buying a home, dismemberment. I just had an incident occur with a customer of ours where a 21-year-old fell off the back of a truck and is now virtually a paraplegic. 21 years old. Think about that. Huh? Dismemberment. Job loss results in financial loss. Disaster and catastrophe. Collision. By the way, the rate at which we're having accidents in Grenada now, that's a real appropriate one. Right? And in the industry, we call them all fancy names like risk types. But let me give you a little story. I won't call names. But I used to be familiar with a certain house in St. George's. And the owners of the house were given the house as a gift from their parents. Young people, having their own property, didn't have to go for a loan, fixed up the property. The property overlooked the marina and the outer harbor. The structure was that of concrete, walls, concrete floors part of the way, only partly, covered with green heart and mahogany. Downstairs, 2 apartments with a lovely deck. And so many evenings we will sit there and enjoy the ambience, the view. And of course, I am trying to get them to buy insurance. So I'm trying to convince these 2 young people of the importance of, one, insuring the property. And interestingly, they took a position that they were the best investors of their own money. That they did not have to insure their property because they would be able to generate so much income that should something occur, they should be able to recover. They also had an interesting notion because I also try to sell them pension. Start thinking now as you are younger about what will happen to you when you retire. And the husband in particular said to me that he had 2 apartments downstairs, that at their current age, if he were to start saving that income, that would be his pension. We had many arguments over this. Couldn't convince them. And then a couple years later, it's about 9:30 at night, and I get a call that the house is on fire. So of course I rush down to find the usual fire brigade. House is in flames. It's a total loss. The apartments are destroyed. And I meet the family in the yard distressed, as you would expect. So we share some of the emotion. And then I guess trying to relieve the pressure that he's under, he turns to me and says, "Can I buy the insurance now?" I want you to remember that story, because we're going to go back to it. The theme is preparing for uncertainty. So when you look at this presentation piece, what do all of those things have in common? They all represent a significant financial impact in our lives. Am I not right? Could any one of these things occur? Well, I guess if you're a millionaire, you could overcome a little earthquake or something. But for the average Joe, these represent significant events in our lives. Beautiful family, huh? So how do we plan for these events? By including insurance in your financial planning. Let me leave a little slogan with you. Because in the financial industry, everybody is producing products to create income. But what is the product of the insurance industry? Insurance is the only financial industry that has products for the protection purposes against financial loss or ruin. Would you agree? It is. It's the only financial institution that does that. Or the products that we sell are intended to build back your house after the earthquake, the hurricane, right? To protect your family after the breadwinner has passed on, right? That's what all of our products do, right? So we must start with a plan. Do we agree on that? That we must start with a plan. So what is insurance? Now, I used to think this was a real kind of basic, simple, elementary thing. Until sitting in my office, having a discussion with a relatively intelligent individual. And he says to me, "I don't understand what insurance is, Philip. As far as I'm concerned." And then he goes off. And I explained this to him. Insurance is a risk transfer mechanism, transferring the risk from one person to the next being usually an insurance industry, a member of the insurance industry. Yeah? And here's an interesting concept. Insurance protects the life that protects the asset. Who buys the house? Who starts the family? Who buys the car? What if you don't protect that life? Can you get a loan in the bank without for a house without life insurance? Why? Because you got to protect the life that purchases the asset. That's a concept. Huh? It is also the pooling of premiums. You like the display? A nice pool with premiums coming in. Kind of nice, eh? But it really does convey the concept. Yes? Where people of similar needs pool their premiums. But there's a common understanding in that pooling. The concept being that everyone won't get hit at the same time or to the same extent. Y'all believe that? You get that? The concept being that everyone won't get hit. So somebody said to me, so when a hurricane passing over Grenada, not everybody getting licked up. Y'all think back. Y'all remember Emily? They say Emily hit the north and the south was spared. So no, it doesn't happen that way. Everybody does not get destroyed. Right? And here's the interesting thing. As of now, there is no other tool that works as well as insurance. Let me tell you something. We will not be sitting in this room at this hotel, no. If this hotel did not have fire protection, public liability protection, God forbid one of us walk outside, they had just mopped the floors, slip and broke our spine. The hotel will have to fund a hefty bill. So they would not have this function unless they had protection. An airplane will not land at our airports unless they were assured of aviation coverage and a whole series of other covers. It just won't happen. A boat will not berth at a port. So there'll be no economic activity without this industry. How are we going? Yeah. That's the power of the insurance industry, yeah? Uh-oh, no, we must get this slide. So we must start thinking protection and recovery. So we must start with the plan that thinks protection. If I'm going to experience these events, how can I protect myself? And you all check out this slide. And as you say, so here's a lady going to her insurance and filing a claim. You all can see this? It's funny, eh? And she is filing a claim for a fire that occurred in her kitchen and claiming that her wardrobe was burnt. Right? Now you laugh. You laugh. Because you don't understand how much of this has happened. Right? And this story tells so many things. It either tells that she didn't know what she bought. It either tells that she didn't file her claim properly. It tells a whole many things. But again, we're going to come back to that. I want, if I leave nothing with you tonight, I want to emphasize a point. This point. Know what you are buying. So as I stand here now, we're all intelligent people. I ask you, how many of you know what your homeowner's policy covers? Don't answer. How many of you know what your life policy covers? How many of you know what your health policy covers? Your car policy covers? Think a minute. Well, from our experience, we've come to realize that most people have no clue what's in their policies. But I believe I'm talking to a better crowd. Know what you are buying. You will not buy a fancy car and you don't know the features. You would not build a home and you're not sure where the door's going, you're not sure where every detail in your home is. but you're prepared to buy a product to protect you, and you don't have a clue what's in that product until there's a claim. Remember that slide before? Claiming for a fire in the kitchen and saying the wardrobe get damaged. I heard somebody say smoke damage. That's a good one. That's a good one. That's a good one. Check out this one. I think you misunderstand the $1 million umbrella policy only covers you for claims involving an umbrella. See that? And many people will say, that's the insurance trying to con you again. I see heads shaking and nodding. But I bring it back to the slide. Know what you purchased. Because in case you don't know, there is something called an umbrella policy. So know what's in that when you buy it. Of course, it doesn't mean claims with an umbrella. But you understand this slide, right? So what are some of the insurance myths? Insurance myths we have discovered, all does hinder people from actually buying insurance. I'm going to show you some statistics in a minute. Right? It actually prevents people from buying insurance because they're so convinced on some of these myths. The first one, who says that is not true? They don't pay. Convince me that you don't believe insurance don't pay. I see a lot of heads nodding. But that's one of the myths. Again, the stats I'm going to show you is going to demonstrate otherwise. That a thief. Let me give you a quick story. An officer of the law comes into my office, files a claim for his property. As is customary, we send out an adjuster. The adjuster reviews and submits a report. And we discover that in fact, the steel is covered with 1/2-inch cement. So the construction is incredibly poor. And you talk to a couple neighbors and they tell you that house has been breaking apart since whenever. So his claim was denied because his claim said that there was an earthquake. But little did he know that we are not weather people. So we turned to the weather people and say, was there an earthquake on the 24th of October? And of course they said no. So we turned to him and said, well, there's no record of an earthquake. He then comes back, leaves angry, comes back a couple days later and pulls his jacket to the side to bandage his gun. Police officer. Let's just say he won't be doing that again. Right? But I'm showing you how people call people thieves, but who's the real thief? Right? They also say it's a dead susu. Y'all know susu, right? All Grenadians know it's susu. So when they say a dead susu, it means you're putting money in, but you ain't getting nothing back. All right? They only take your money. Y'all could come up with any other myth. I want one other myth. Anybody? None? Let's move on. Come again? Eh? You see the wardrobe one? I thought I'll put that back there just to remind us. Right? But to be a little bit more serious, why is this critical tool called insurance viewed in such a bad light? Why? Let me give you some information here. Okay. I want to use the Ivan experience as an example. And I'm sure many of you would have heard stories where insurances did not pay and who had to go to court and much of the like. Yes? You would have heard the stories, right? The Ivan experience. These are some of the stats. The housing stock of Grenada only had about 20 to 25% insured. That's it. That's all that was insured. But here's an interesting piece of information that supports the theory that we are not thieves. Right? Check this out. After Ivan, over $480 million was paid out to Grenadians within 6 months of Ivan. You all remember Ivan? Yeah. You all remember how everybody turned a contractor? Yeah. Because money starts circulating like things ain't good. You all remember Grenada's GDP in 2004? How much million? Was around 6 something million. So that is more than 3/4 in 6 months, handed out to Grenadians in cash. Right? That's why the economy was jump-started. I want you to picture for a minute if it was 60%. Can you imagine what our economy would look like with 60%? Also think about this. If only 20 to 25% was insured, how did the others recover? How did people recover? So that 480 million represented about 92% of claims. So the stories that you would have heard of insurance not paying and the court cases that you would have heard represented 8%. You see the skew I'm talking about? We only remember the bad, eh? We never know the good. Sometimes we don't even know the good. Right? You still feel from this, the insurance so bad? Look at that. Let's move on. Today, there are still properties that were uninsured which are not rebuilt. My uncle was a World War II veteran, built his home, and was always proud to say he doesn't depend on no one. I built that home with my hands and raised my family. Yes? And in Ivan, it tore his house to shreds. His house back in the day in Marrast was considered one of the, we call it, posh houses in Marrast. Right? Tore it to shreds. And you watch this tough 81-year-old man. When I brought him back to his house a day later, break and cry like a baby. He died in 3 months. He had no illness of the Ivan. Right? Those are facts. That's the stress related to incidences. And that happened in Marrast, and I know it happened throughout Grenada. I attended many, many funerals. I'm sure many of you did also. Am I right? Yeah. Many of our elderly died because of the stress. And here's the interesting part. Most were not insured. And of the 20 to 25% that were insured, many were underinsured. Because here's the predicament. So I've just built a beautiful home upstairs, empty downstairs, and I insure the upstairs, right? And as a couple of years go by, a couple of dollars float in, and decide, boy, watch. Like the story I told you, you all remember the story? About the couple that said, I'm a pension downstairs, so I put in 2 apartments downstairs, right? But I never update my property insurance. So if I had it insured for, let's just say $300,000, that too little bit, $1 million. And I put in another $500,000, I still insure it for $1 million. And then an event hits. And the adjuster arrives and calls back to my office and says, I thought you said this was a one-story building. I said, yes, it is. Turn back to the proposal. Yeah, it is. Well, no, I'm looking at a two-story building with apartments and so downstairs. What happens then? You're underinsured. So we're moving on. Know what you are buying. So remember we said, this whole evening is talking about preparing for uncertainty. Right? I believe I convinced you of some of the uncertainties. And so we're going to start with a plan. I'm not sure how I'm running on time, but we're going. Right? And what are some of the things in life we should be planning for? Because remember, uncertainty affects those too. So what should we be planning for? Education. So we have the family, we have young people, and we're saying, well, we're taking them to school, but when they reach 18, I will start thinking about college and university, and that is where the money starts. Right? You can't. You got to be thinking about that before. Family and children. Right? Buying that automobile. Buying a home. Right? These are some of the things you have to plan for. Retirement. Retirement is one of the big ones. Illness. Another big one. RIP. Death. You all heard of the bus that went over in the Grenada the other day? See how easy it happens? Estate planning. This is one of the other areas I really want to impress upon you. We got to get into more estate planning here. Because that's where the protection really comes in. When you start looking at your life. And of course, disaster. So let's look at some ways to prevent financial ruin when you have a loss. Shall we? So what are some of the tools to protect, maintain, and also to advance the standard of living? Because while you're living and you're planning for that loss, you don't want to continue to be where you were. You're expecting to advance yourself. Right? As you get older, you get a little more money, you buy a better car, you buy your home, you send your children to school, and then you advance to a nice university. You start setting aside for your pension. Right? You're thinking of health insurance. Right? So here are some of the things you should do. Do a financial self-analysis. Everybody afraid to do this. Everybody afraid to do this. But I will promise you one thing. When you do it, you're going to be shocked at how much you're worth. You're going to be shocked at how much you're worth. You're worth more than you think. Right? Balance sheet, that's where you start. What do I own? I'm not going to go through these in detail because I realize I'm speaking to persons who probably use these tools for their customers. But it's very important tools in laying the foundation of a plan. But I just want to talk to income and expenditure. So, when you expense in here, you are literally expensing every cent you spend, including the beer in the rum shop when you're going home, including the hairdo, the fingernails, including the groceries, including electricity. You are identifying every source of expenditure and leaving out none. You see what I put there? Be honest. The more brutal, the better it will pay. And coming out of that honesty and that expense and income report, lay yourself a budget. I'm not telling you to don't want to stop and have the bear. I'm not telling you to not cater for the lovely hairdo and the fingernails and the pedicure and so on. I'm not telling you to deprive yourself of these things. I'm saying to you to plan it and budget it so that you know where you're going to spend and how you're going to spend. This is the one. Set up an emergency fund. And you notice I put there 3 months expenses because that is the standard. But in my experience as an accountant, I have found that everybody say that's too hard to do. Philip, that's too hard to do. Because by the time I put aside, the children need this, that, it's spending. So take a smaller chunk. Take $1,000, $500. And as you make that first 5, you say, okay, I'm going after the second 5. Keep it small, but your goal is to go for 3 months expenditure. Yes? And keep that in a fund. Now, here is something that's really interesting. Research fundraising resources. You all know that every Saturday now, we have a motorcade going around Grenada asking for monies for support. You know that. But nobody thinks of that prior. But there are other resources you can access. There are many organizations that donate and support. You have the Heart Foundation. You have all sorts of foundations that are out there willing and ready to help. Make yourself aware of it. I'm told that I need to speed this up. You know the new trend today is GoFundMe. Right? Figure out how to do a GoFundMe. Right? Now I can see from some persons, what the hell is GoFundMe? But Google is our good friend. Huh? Google. Right? Helps you to raise funds by appealing to others on a global scale. And then this one here. Our culture, boy. Our culture and accepting help. We don't really like it, eh? Too proud. Too proud. But you must accept the help. All right? So those are some of the things you can do. And I guarantee you, it will make a world of difference. And the last one. Oh, everybody could see the last one? Secure insurance. Right? Secure insurance. My colleague Tonya could tell you some of the experiences we have with life, in life, with families who would have lost loved ones. And thank God that they had a life insurance. Yeah? So what insurance you need to have to avoid financial ruin? Let me go through this part quickly. You must have a life insurance. You absolutely must have a life insurance. And if you refuse to do it for yourself, make it the first thing you give your child. A life insurance. Because that is the sending forward of wealth. Disability insurance. Most of us feel that going to happen to somebody else, not me. Remember that story I told you about the young man that fell off the back of the truck? 10 minutes before he was joyriding. Didn't think for a minute that that's where his fate would be. Right? Health insurance. Need I point out the cost of health insurance in today's world? Need I point out the percentage of cancer patients we are having? Need I? And then plan for pension. Our colleague here, I'm sure, may mention that. But there are other insurances. We spoke about education. Right? Well, with a vehicle, You must have it. You can't drive on the road without it. The law says so. But do you know there are persons with million-dollar homes who, once their mortgage ends, are stop paying insurance, are done pay insurance, right? Remember the story I started with? The guy, that young couple telling me, no man, I ain't paying no house insurance. The money I will make, house went up in flames. Pension gone up in flames. Yes? So you must do it. Right? And just let me quickly show you some of the life insurance products. Whole of life, term life, endowment, critical illness. Annuities, critical illness is becoming more and more important. Right? When you see the levels of cancer that we're generating. And again, pension, group creditor, mortgage indemnity, medical, group, and individual. And types of general insurance, motor, marine. Let me tell you something. See this section here? Grenada is growing in wealth. A lot of marine. And it's very heartening also to see our fishermen protecting their product, right? Their livelihoods with insurance. Very good. Contractors all risk, property owners, bonds, money and cash in transit, liability. Remember I mentioned liability for this building? We wouldn't be here without it. And in closing, we think it is only fitting that we remind ourselves of our responsibility in this social partnership that we are here. Let me go back. Insurance is a means of protecting from financial loss. It is a form of risk management, primarily used to hedge against the risk of a contingent or uncertain loss. Plan for uncertainty. Make insurance a priority. Thank you very much.
Okay, thank you very much, Mr. Phillip Gittens. So at this point in time, I'd like to first of all open the floor for any questions. Or should we just move on to the next, to the discussant, and then we go for questions afterwards? Okay, I think we'll do that, all right? So I'll probably start with, from Mr. Belmar. Or do we want to go with Mr. Mr. Williams first. Yeah, Mr. Williams, yeah, sorry.
Good evening, everyone. I know we are tight for how many time? What's time out? 5 minutes? Okay. So like our chairman and the previous speaker and our moderator, I too would like to join in congratulating and applauding the ECCB, and in particular our local chapter, Valine and Linda, for the excellent job that you're doing. And for that very important initiative that you take on every year at this time. As we know, October now is known as the month where the ECCB would put on the Financial Information Month. And as the previous speaker mentioned, we have the broad topic to accomplish financial empowerment through education. And to be more specific, this year, quite appropriately, the theme is preparing for uncertainty financial tools to help you protect everyone and everything you care about. So the NAS, we are happy to be associated with this initiative, and we feel very proud that we have been invited to participate. We are not the typical insurance company, but we provide what we call social protection for all the citizens of Grenada, Carriacou, and Petit Martinique. So we are different, but we do provide the protection that, a type of protection that is needed as you go along in life. So the question is, how do we prepare for uncertainty, and what are some of the tools that the NS provide for you to mitigate against these uncertainties? So we're going to show you some of the product that we offer, and we're going to drill you through, or we're going to explain to you how you could go about mitigating against these uncertainties with the products that we provide. So firstly, we said, if you are employed, if you are self-employed, if you're earning any income, you must register with the NS. You must register with the NS. I see some person smiling. I would give you a story. As you know, when NS started 36 years ago, people reversed the NIS and they call it SIN. It was a sin. And NS really was exposed to a lot of criticisms, and we've come a long way. But one of the most comforting things that we really enjoy when we see a pensioner come in and say, thanks NS, thank you. Because when you would have worked hard and at the end of your heyday and you have nothing else to come in, you're no longer employed, and that pension check comes at the end of the month and it's the only thing you have, then you start to appreciate the value of NS. And a lot of people regret that they did not join and they did not contribute from the beginning of the working life. All right, so I want to implore on you that once you start your employment, you should ensure that you register with the NS. So not just register, ensure that your contributions are paid. And it goes both for the employees and for the employers. Because there are employers who deduct the contributions and for some reason do not pay it in. Right? So the onus is on the employers to deduct the 4%. And by the way, come January it's going to be 5%. Come January 1st. Currently it's 4% from the employees and 5% from the employer. Come January it's going to go up to 5 and 6. It will be 11%. So you have to ensure that the employer deducts the contributions from your salaries, but at the same time that it is paid in. And how you can do that? You can come in anytime in our customer service department and try to find out exactly what's going on. We call on employees to try and come in and make sure that your contributions are being paid by your employer. That is seeking your own interest. So we ask you to do that. I see my PR personnel here. They are willing and able to come to your workplace. You call on us. They would come to your workplace, maybe in your staff meeting. They will speak to you. They will answer the questions that you want, and they will tell you exactly how to go about doing that. Make sure you know the qualifying requirements in order for you to claim. The claiming of a benefit is one of the tools that would help you to mitigate against those uncertainties. Because it's not a matter of if, it is when. You would get sick. There are illnesses that will take place. You're going to get sick. When you get sick, you can't work, you're going to lose earnings. We are going to step in and help to mitigate against that. All right? So try to find out exactly what you need to do to claim. What are the qualifying conditions? And again, our public relations department is willing to help you with those things. When making a claim, very important, make sure that your claim form is properly prepared. Because if it's not properly prepared, one, we're going to deny the claim, you may have to get back to you, right? And we want employers to pay particular attention to the claim form because they are the ones who have to submit it to the NS, right? We have some new claim forms now that is going to take into consideration the new initiative from the banks. The EFT, very soon we'll be moving to that, and we will not be issuing checks anymore. It's not our doing, that's where the world is going. Mr. Johnson and Vaughn is going to tell you. So the EFT is such that we will not be issuing individual checks. So what we want from you is you have to give us your bank account number, and in giving us the bank account number, you need to state to us whether it is a savings account or checking account that you have. So we have some new forms that we have redesigned, and we want you to tick those different boxes when you're claiming. In addition to that, there are employers who have an arrangement with their employees that if they submit a claim, if they are on sick leave, they don't want their employees to lose earnings, so they would pay them their entire salary. But they have that agreement with the employees that you are going to give us back that check when you get it. Now, we have our claim forms redesigned for that. We just had some changes in the regulation because before, a claim could not have been assigned to somebody else. So we had a change in the regulations, so now it can be done. So what has to happen now, once you have that agreement with your employer, you have to tick a box that tells the NS, make my check payable to my employer. And if you don't do that, we will not be able to make it to the employer. So employers, before you submit the claim to us, make sure that the employee tick that box that says, make the check payable. Because if they don't do that, we'll have to make the check to them. And that would defeat the whole cause. So we want employers to pay particular attention to the claim, make sure it's properly filled up. And employees, you have to make sure that your claim is properly filled up before you submit. So these are some of the tools. Our benefits, quite a number of them. We have 3 different benefit branches. All right, 3 different benefit branches. Our benefits are divided into 3 benefit branches. The first one is what we call the short term. The second is the long term. And the third is the employment injury. So quickly, the short-term benefit branch, some of the benefits that we have in the short term. These are sickness. You get sick, you lose earnings. That's where we capture that. Maternity, the ladies, you get pregnant, you have your baby, your maternity benefits. We have the maternity grant. Now, this is quite interesting. Most people don't know that. Your spouse or your wife maybe is not employed or she's not working. She cannot qualify for a benefit, a maternity benefit in her own right. Her spouse, her husband, if he's working and he has the sufficient, sufficient contributions and so, he can get a grant. He can get a grant based on his contributions. All right? So you see, that's another mitigating factor, another protection thing. Just in the event that the wife doesn't qualify, there is something that could still come into the household to help you with your young one. Funeral, of course. Some people say it's not large enough, but of course, it's better than nothing. So we have that funeral grant that you would get. If you lose someone, we have funeral grant that will help you with the burial. I'm trying to go quickly because you don't have. So the long-term benefit band, that's what the NS was formed for, to pay pension. That's our real deal, the long-term benefit branch. And that's where over 85% of our expenditure goes in the benefit branch. So we have grants. Under the long-term branch, we have grants, age grants, survivors grants, invalidity grant. Now these are when you don't have sufficient, when you don't qualify for the long-term aspect of it, you would get grants. So you get an age grant, right? For the long-term pension, the age pension, you have to have about 500 contributions minimum. If you have less than that, you would get a grant. Or you have the survivors grant. In the event that someone dies, the spouse would get a survivors grant if the husband or the person who died was not enjoying a pension, they will get a grant. And you have the invalidity grant. The same thing, if they were not qualified for invalidity pension, then you would get that one-off grant. It's a one-off payment. The pensions, on the other hand, we have about 5 different pensions. The age pension, that's where we would pay you a pension for as long as you live. For as long as you live. And with the medical advancement and so that we have now people living longer. Some people don't believe that, but the statistics show that people live longer. We have a few, every now and then you will hear a young person die, but that is not the majority. We have the statistics to prove that people are living longer now. So if you retire at age 60 and you live up to 80, up to 90, we have people over 100 that is still getting pension in the 80s and 90s, all right? And you may wish to know that after just under 3 years, you would recoup all the monies that you have paid in less than 3 years of receiving a pension. And that's the reality. So we have the age pension. We have the survivor's pension, that if you die, your spouse would get a survivor's pension for as long as they live as well. We have the reduced age pension. That was a benefit that we had introduced because, as you know, the objective is really to pay pension. And so many years ago, the board took the decision that we're going to start paying pension to persons who, even if they didn't reach the 500, as a means of helping. So we have some people in the system, it's not been phased off, but there are people who are enjoying a reduced age pension now, although they did not even reach the 500. But that was an initiative to ensure that, to help people in the earlier stage of the scheme. We have the invalidity pension. That's you're working, you're a healthy person, and the brother explained about some of the accidents and sicknesses that can take place. And for some reason, you get sick and you can no longer perform or you can no longer work. A doctor certifies that you cannot do your job again, and they will certify that you're now eligible for some sort of invalidity pension. So we get a pension for as long as you live. And the Provident Fund, these were the persons who, when the NS came into being in 1983, there were persons in the system, right? We had that non-contributory fund, the estate workers. So the NS took that over. So we have persons who are enjoying the Provident Fund pension and they are receiving pension as long as they live. The other one we have is the Employment Injury Benefit Branch. That's a very interesting one. This has to deal with injuries that will take place on the job, right? Injuries or sickness that you may obtain because of the job that you are doing. You slip on the job, or you're walking and something falls from the ceiling, it hits you, you get sick, or you get injured. The employment injury is going to take care of that. It's a lot more generous than the normal sickness, right? So it has the injury benefits, right? You have disablement pension. You have medical benefit, you have death benefit and disablement benefit. So this benefit, it provides for you if you are sick, you go to the doctor, we will reimburse you the cost of the doctor. If you have to take transportation to go to the hospital, that will be reimbursed as well. So it's a very generous benefit, but it only comes into place as a result of injury that you obtain on the job. Right? So I was a little bit rushed because I want to keep in time. We invite you to ask questions. Our PR people are here and they are willing to answer. You can meet them one-on-one and answer. They will answer whatever questions you may have. So thank you very much for.
Thank you, Mr. Williams. And we'll move straight on to the next discussant. I'll ask Mr. Leslie Barry. All right. From Barry's Engineering Company Limited.
All right, good evening and thank you, Vaughn. I'm going to throw in my 10 cents. I think it's 10 minutes we have, right? Okay. Again, let me just take the opportunity to thank the ECCB for having us here this evening to at least educate or empower the general public on disasters, building codes, and so forth. Right. Now, the biggest investment that most of us would make in our lives is building a home. But yet, we tend to trivialize it. We may spend $1 million on a house and, it's not built properly, substandards, and we don't observe, the regulations or the rules that we have in our building codes. So I'll just spend my 10 minutes just trying to enlighten, you guys as to some of the things that we can do to build better and to secure our investments. All right, so the focus would be on disasters. And, just like for general knowledge, disasters, events that cause catastrophic damage, loss of life, property, and social environment disruption. That's basically how we see disasters. And we're going to look at the different types of disasters. But we will just focus more or less on the natural disasters. We have natural disasters, we have technological disasters, and also we have man-made disasters. All right, natural disasters, most of you would know what these are, and we have quite a number of those, right? But for our purpose here this afternoon, we're just going to be focusing on the hurricanes. But we have the tornadoes, the tsunamis, the wildfires, the heat waves, lightning, drought, volcano eruptions, earthquakes, floods, landslides. All right, technological disasters. These are things as chemical releases, power outages, natural gas explosions, some of which we, it's not that frequent in our parts. Man-made disasters, terrorist attacks, riots, mass shootings, genocides. All right, now we look at the building codes. What really is a building code, or what is a code? We say it's a set of rules that specify the standards for the construction of buildings and non-building structures. And we have a couple examples there. Again, we want to highlight the Grenada Building Code. There is a Grenada Building Code, right? And we also have a Grenada Building Guidelines. Now, the difference is the building guidelines is for smaller buildings. Buildings that is less than 2 stories, or 2 stories and a single story or 2 stories, and that size being less than 2,500 square feet. So we have a set of rules in the guidelines that would tell you how you should design and how you should build. Now, the building code it deals with buildings that are bigger than that and more than 2 stories, all commercial buildings, hospitals, institutional buildings, and so forth. The guidelines does not cover those structures. I also had the International Building Code, or we call the I codes, the International Residential Codes, and the Euro codes, because these are codes that are also used, in Grenada. Right. What's the purpose of the building code? The main purpose is to provide what we call minimum standards. Minimum standards, and we can highlight minimum standards. Right? Minimum standards to protect public safety, that's important, and general welfare as they relate to construction and occupancy of buildings and structures. All right, so the codes provide minimum standards. So there are times then you would have to go beyond that. All right, the intended users of the codes: architects, building inspectors, contractors, engineers, facility managers, insurance companies, real estate developers, safety inspectors. So these are some of the users of the codes. Right, let's look at the disasters. Right, and how do we do like a disaster-resistant structure or disaster-resistant building when it comes to hurricanes? Right, now, how does the building code come into play? We said the building codes are the baseline defense against damages from natural disasters. We said that they regulate the design and construction of buildings, and they must be adhered to. Right. There's a complete section in the Grenada Building Guidelines and the Grenada Building Code that deals specifically with hurricane-resistant construction. Yeah, I think it's section C of the Grenada Building Code. Right. Again, we must be cognizant of the fact that we are in the hurricane belt, and every year there's a strong possibility that we're going to be getting a hurricane or some storm. Right now, hurricane-resistant construction principles must be adhered to if safe buildings are to be erected. So you cannot build a safe building if you do not adhere to the code. Right? The most vulnerable areas, with hurricanes in any building would be the roof, would be your windows and doors, and would be the walls. So those components we have to ensure that they are properly constructed. Right? And the objective of a hurricane-resistant construction is to produce a building that will not collapse during a hurricane. We want the building to stand up, and we want the occupants to be safe. As we have said before, safety is critical. All right, so then we just look at some rules for the construction of resistant buildings, hurricane-resistant buildings. The first one, the building site. Right, and all of us should be mindful of that. Yes, that at the hour, that time when you're about to purchase that lot or to select that lot, now the site is critical. Very, very much so. Now, if you're on the brow of a hill, you'll be very, very, very vulnerable to hurricanes. Right? Now, if you are sheltered, all right, so we're going to get to that. Now, if you are sheltered, then you are less vulnerable. If you're living like in the valleys or so, you are vulnerable also because you know that with hurricanes, it's associated with a lot of water sometimes and so forth. It could be, flooding could be an issue. Now, if you're on slopes or the edges of cliffs, again, you're very vulnerable because you have exceptionally high wind speeds in those areas. Right. If you're on the coastline, again, you are vulnerable to storm surges, flooding, and so forth. Right. As you say, we have a lot of bros in Grenada. All where you go, you have bros. That's why we say you should seek professional assistance from an engineer if any of the above is inevitable. All right. Building designs. That is another thing that we should always consider. As we said, that building design should be square, hexagonal, octagonal, or circular in shape. You know, now these configurations, they help reduce wind speed. All right. So when you go to your architect or your draftsman, you know, you should be a bit mindful of, you know, the shape of your building. Right. Now, if you have a rectangular building, again, there is a simple rule. If your building is if the length of the building is 3 times more than the width, you could have an issue, because you have a very great surface area for the wind to act. It's going to create some issues. Whenever, if you cannot, again, if you have to be 4 and 5 times that of your width, there are some things that you can do. You can separate the buildings, and that would assist. Let's look at roofs. Types. We have the heap and valley roof. It's a very popular model. It's a good one. Based on the shape, it allows it offers some good resistance to the wind. Gables is fine also, but it's a bit more exposed. So you should take some more caution in the construction of the gable roofs. One of the things that's very important is the pitch, right? And statistics have shown that an angle between 25 and 30 degrees is the best. You know, flat roofs are very vulnerable to high wind, except if it's concrete, right? The fixings for your cladding, if you're gonna use like the galvanized or shingles or whatever it is, you have to ensure that they are properly fixed. You know, especially on the edges. The edges, that's on what we call the eave, and the highest part of the roof where you call the ridge. That's the areas where you have, you know, a lot of what we call localized pressure. So you should put some extra screws on the edges and on the ridge. Right. Another thing that we can do also to reduce some of the pressures, again, is the use of parapet walls, especially if you have a gable type roof. Right. You can do a simple parapet, but you have to ensure that the parapet is strong enough, because that is what will be taking the pressures from the wind. Right. So parapet walls will also help in that regard. Your overhangs or your eaves, you should always try to keep them at a minimum, because that's where you have a lot of the pressures, or what we call uplift forces, acting on the roof. Again, minimum could be about 12 inches to 24 inches. Right? We are not saying that you may not design a wider one, but it has to be properly designed. If you're gonna have patios and verandas, we like that in our region. It's recommended that you separate the patios and the verandas from your main roof, because most verandas and patios are exposed, so the wind would get under the sheeting and that can go. But your patios, your verandas are not as large and so as your main roof. You know, that can go. Mr. Gittens gonna pay you some money for that. All right, and the main roof, we said again, should be secure, securely fixed, or to a ring beam, because that's the main roof. That's where you have all your living room, your kitchen, all your valuables, and so you should ensure that that part is securely fixed. All right, windows and doors. Right, we can spend a little more up front and use impact glass. That will also assist with wind pressures, flying missiles, and so forth. Or we can simply just use some shutters. Simple, plywood. You know, a hurricane is coming, you can just screw them on. Even if you have the ordinary windows. All right, walls. We ask that you install wall reinforcement. Right, now that wall reinforcement, the key is that reinforcement has to be fixed from your floor slab or your foundation, and also your ring beam. Again, you have to ensure that you feel that core where the reinforcement is with concrete. I mean, I can remember going on a construction site and the mason putting up blocks and steel, you know, and each time he put up a block, he pull up the steel. All right.
Serious?
Yeah, that's what he was doing. Yes, you have steel in the thing, man, but you keep pulling it up. So, I mean, at the end of the day, that's nothing. Eh? All right, for timber construction, you know, we are not saying that a timber building cannot withstand a hurricane, but it has to be properly constructed. All right. Fixings and bracing and all that sort of things have to take place there. Again, if you have the building off the ground, because it's so light, it's very easy for the wind to just lift it and, you know, go with it or capsize it or something like that. Now that space that you have between the ground and the column, we should always try to enclose it so that the wind cannot get to the underside and that's it. All right, so these are just some steel buildings, and it's more or less just a couple of rules again. You know, I just wanted to say you have a lot of these steel buildings going up with the high-rise buildings and the apartments, but we should follow a lot of those here. It doesn't mean because it's steel it cannot collapse, but your connections with steel buildings is very, very important. All right.
Thank you very much, Mr. Barry. All right, and we continue right ahead. Leave Stephen the best for the last, Mr. Belmar.
Thank you very much. And I want to take this opportunity to thank ECCB also for inviting me here. I have to try to be quick because we're running out of time. I know as insurance persons, you don't particularly like us. You need us, but you don't like us. And one of the main reasons for that is that you're afraid that money is going to leave your pocket and get into mine or somebody else's own. So let me be quick. But I assure you, no money is going to leave your pocket tonight. In planning for uncertainty, what is very certain, you're going to live and you're going to die. That is certain, right? What is uncertain is the hazards that you may face or your family may face if you live too long or if you die too soon. Those are the consequences you have to mitigate against. Now the question is, how much are you worth? What is your most valuable possession? And on impulse, you may think, well, I own a big house. Mr. Barry is just talking about your $1 million house or your car. But is that the most valuable possession you have? What's about your human life value? Have you ever thought of your working career? And what measure do you take to protect your working career? To give you an example, you work for $5,000 a month, by 12 months in a year, by 10 years, which is a quarter of your working career. And that is about $600,000. Are you insured for as much as $600,000? Quarter of your working career. Hardly likely. And let me tell you, we gamble that everything would work out all right. Long life, good health, and everything is going to be fine with ourselves and our family.
but that is a gamble. Now, as the bankers know, when you're giving a mortgage, you insist that the client have insurance. And that is perhaps the only time that somebody buy an adequate or a reasonable, it's not even adequate, but a reasonable amount of insurance. That's the only time when they're doing the house, because it's mandatory, you want a house. But let's take, for example, you have a house and you die too soon. Is a house enough to leave for your children, for your wife? What about the education? What about the clothing? How do they live after that? They can't eat a house, right? So those are the things you have to consider when you're planning for your future and you're planning your finances adequately. You must consider that. Now, disability is another hazard, and what is unfortunate is a prolonged illness or critical illness. You are alive with all your plans and dreams in front of you, and you watch the destruction of your family while you're alive. And that is heart-rending. That is worse. Now, how do we plan to do that? NIS, as was mentioned, is a benefit, is not a retirement plan that you have. It's a benefit. And usually that might end up to be about 1/3 or less than your actual income just before you retire. So you have to look for other means. Do you have a sound investment plan? Something that would generate you enough funds to put you in a comfortable place at retirement? Hardly likely. Do you know that insurance is the best form of estate creation? Let me give you an example quickly. On $100,000 while you are young, like say 25, you pay less than a cent for $1. For $100,000, you pay less than $100. And tell me another form of investment that would create an immediate estate for you from the payment of, let's say, $100, $100,000. So imagine $250,000 you insured for just $250 or less. Estate creation immediately. So you have to think of it. Now, how do you get it in? Because like us here now, and a lot of us think only of retirement 5 or 10 years before retirement. We think of finding what plan, what do I buy so that I can retire comfortable 5 or 10 years before. It's already too late. But the message we have to get out to young people is that, you have to start. Pretty fast cars is not really an investment, is not really the best asset. It is the fastest depreciating asset that you could have. But how do we convince them otherwise? They're young and impressionable. You don't travel with your house. You don't travel with your land. What the ladies could see is a fast car. What the gentleman can see is a nice lady in a nice car, So, but we adults and loans officers and so on and parents have to encourage young people to think differently. Think differently, because that is the only way we can create an estate and create a sound environment and a comfortable retirement for them. Now, the thing is, as previously mentioned, look at the destruction with Hurricane Ivan. Close to $500 million paid out. Look at what is happening in the Bahamas now. Over $7 billion in damages. And they're still just starting to recover. When are they through recovering? Without hurricane without a sound plan and insurance to cover that. Whatever will happen, according to Murphy's Law. It will happen whenever it happens. But what we have to do is implement mitigating factors. So whether it is life, our lives, whether it is our property, we have to ensure that it is adequately insured at all times. Because remember, and a lot of people don't take into consideration, look at how many years after Ivan now? About 15? About 15 years after Ivan. What, in my experience, what I'm noticing happening again, we are becoming very complacent. Still underinsuring or self-insured. Still taking our chances. Now, if you continue to do that, and a disaster, catastrophe was to occur, what would be the situation once again? Same, did we learn? So the thing is, what we have to try and do is do the best we can to educate and to try and put structures in place so that what happened then would never happen again. Thank you.
Okay, thanks, Mr. Belmar. At this point, we'd like to take questions on the floor up front. All right. Okay, so we have someone from the back. Okay, you can come to the mic. Yeah, thanks. Thank you.
Good night again.
Okay.
Brian Grimes, audience member.
Thank you.
Yes, my question is to very simple questions, very basic questions. I have a question for Mr. Phillip Gittens, and I have a question for Mr. Lewis Williams. My question for Mr. Gittens is, as a layperson, myself, during the period of Ivan, the general thought process was the insurance industry and fraternity was in a lot of trouble based on the extensive damage of the hurricane, right? I know you said with your statistics that only about 20 or 30% of the houses were insured. But I'm not sure, you know, let's imagine that 90% were insured. Was the insurance fraternity ready for such an event? So could you just explain to me what kind of mitigations or what preparations that the insurance industry have for events, catastrophic events such as those? Because you spoke to us about us preparing. What does the insurance do to prepare, right? So you'll answer that. My second question is to Mr. Lewis Williams of the National Insurance Scheme. Is that correct? Mm-hmm. Proper name? Yeah, you spoke about situations with a couple, the female with maternity leave not being employed, and the husband being able to claim based on his contributions, right? What I want you to explain for me as clear as possible. Give me a clear definition of what a spouse is. Is it the traditional, right? You go in a church and you get married officially, or can a spouse or a wife be somebody who is common law, or even somebody who is just in a relationship for a period of 1 year or a year and a half? Because it is a very relevant question. It might seem oversimplified, but a lot of people are unclear as to what a wife is. Because, you know, you have common law relationships and you have those you do officially in the church. So I want some clarity. What does the policy of the National Insurance Scheme say about that? So basically, those are my questions. Thank you.
Thank you very much, Mr. Grimes. All right, so we start with Mr. Gittens.
Okay, so. Hello. Right. I gather from your question that you're asking what protects the insurance company. Is that basically, right? Right. Most insurance companies have to buy reinsurance. So they themselves spread their risk. And it is done in a manner where I'm sure most of us would have heard of Lloyd's of London, which is very common in our area. Lloyd's is really a broker. You're talking about having reinsurers whose pockets are incredibly deep, who would buy Lloyd's for their name. They will buy a brokerage in Lloyd's in order to use Lloyd's name. But essentially, they are reinsuring my stock of property here. Right? So I pay them to ensure that when an event occurs, I don't have to try to find money to pay those premiums, to pay those claims. Yeah? So that's how you're protected. Right? Now, one of the critical things to remember is in Ivan, the 8%, remember I said 92% represented the over 400 million? The 8% did not have that reinsurance. So they were covered by insurance companies that did not have that reinsurance. So they were not able to pay. They had to find the reinsurance. They had to find the money to pay the claims. Yes? So that is the difference then to now. With the current, I'm coming at you. I know your next question is, right? You're coming with, so then how do you know that we are reinsured? With the introduction of GARFIN, GARFIN ensures that no operator in the market today can operate without adequate reinsurance. Right? They also ensure and require that you build you maintain a fund to protect your liability. So in fact, property owners today are protected in two ways. They are protected by reinsurers, and they are protected by the fund held by GARFIN to ensure that we can service our liability.
Thank you. My question was, the 8%, right? Did they have an avenue for legal redress because, you know, they pay the insurance and when it come down to it, they were left in the rain, literally. What does the layman such as myself do in a situation where the insurance company does not have reinsurance and they say, boy, we broke, so now we can't help you out? What can we do?
Yeah.
Right, so like I was saying, you won't find that today, right? Because GARFIN ensures that all registered insurance companies operating in Grenada must have adequate reinsurance,
Yeah.
right?
Okay.
However, back in Ivan, in that period, which is before 2009 when the legislation came into being for GARFIN and so, prior to that time it was the permanent secretary in the Ministry of Finance who was the insurance supervisor. And it was his responsibility to ensure that there was adequate reinsurance and so on. Of course, it was undermanned and so on, and it was just not possible back then. All right?
Okay, thanks a lot. All right, so the other question, Mr. Williams.
Right. Well, straightforward. If you were married, of course, you know that's straightforward. But we also would pay, and I have my PR person here to back me up. If you're cohabitating with the person, all right? Yeah. Well, that's what we use, cohabitate. Common law. You're living with the person.
Yeah.
You'll be considered a spouse. All right. So I hope that answers.
Okay. Okay, thanks a lot, everyone. Oh, next question.
Yeah, so I have two questions, one for Mr. Gittens and the other for Mr. Barry. So, Mr. Gittens, so I have health insurance. And one of the things that I'm always annoyed with is having to pay the premiums every month and at the same time having to find the money up front when I still go to the doctor. In your estimation or opinion, what do you think we need to see happen in Grenada or the wider Caribbean where we can get to the point of when you go to your physician, the charge goes to the insurance company as opposed to having to come from your pocket, and you file a claim that you get paid how many months down the road? And the next question for Mr. Barry. Mr. Barry, it is in my humble opinion that we have fundamentally designed the houses in the Caribbean wrong. The Caribs were here 1,000 years before the Europeans. And hurricanes are not new. So they too experience hurricanes, and as such, over that period have developed a specific design for hurricanes, which is round the houses with very low roofs. And in the Caribbean, we have adopted the European style of building, which is designed for temporal reasons, temperature and so forth. And we are going in this cycle, this 50-year cycle, where we have to restart every time we have a hurricane come through. Do you agree, sir, that we are building incorrectly on the fundamental level? Shouldn't we be building round houses only?
Okay, so we start from the round house and then we come to you.
It's on.
It's on.
All right. As you'd have seen on the slide, shape definitely plays a part, right? And we said that yes, the circular type homes, offer, good resistance to wind, yeah. But at the same time, we have to be mindful that hurricanes are not the only disasters that we are exposed to, right? So no, the issue is not we should be building wrong houses. The problem that we face is that the building codes, the building regulations are not adhered to. They are not observed.
All right. So
One more thing, Mr. Barry. No, I have heard that there is a type of storm, regardless of what you've done with that building. If that storm hits, there is a high probability it would shred that building, following all of the codes. Because the codes are designed for certain wind speed. But when a storm blows through a country like Grenada, what you have happening is the storm comes in at a major hurricane force of 185. But because of the terrain, we only have hills and valleys. What the storm does is create many tornadoes within those caverns, and you have gust winds above 200 miles an hour in certain locations. So the theory is that no matter how well you adhere to these codes, if a storm comes through at 185 miles an hour with gusts over 200 miles, if you're in a square building, you're in trouble.
No, it's not true.
all right, so that's a myth. That's a myth buster here.
At the beginning, Mr. Gittens and I were having a conversation. And as he says, the only thing that could save you in that instance is insurance.
Okay.
But just to get to your question here, is yes, we hear about the 185 and the 200 miles per hour wind speed. Now we are getting into some technicalities here. What you actually designed for is that 3-second or 5-second gust. So buildings are designed for that gust and not necessarily the 185 yeah. So that is what the building is designed for.
Okay, thank you very much, Mr. Barry. Mr. Gittens, and I think there's one more question.
So Mr.
Frank.
Your question was, as I understand it, paying, not having to pay
When you go for medical.
when you go for service. Let me give you a quick story. For health, right? In another time, I have another profession. I was a pharmacist, but I am a pharmacist. That was my first profession. And in those days, I won't call the years, in those days, in fact, what happened was persons came to us with their claim, right? With a claim form that the doctor would have signed, and we will just sign. And the doctor would receive a check. Right? So call it progress. Call it what you will. It seems we needed to move away from that. All right? But I'll tell you what I do know. Can still happen. I'm hearing someone talking about a signing. They're on the right track, right? There are many things that can be done. But building a relationship with your physician becomes one of the primary things to have happen. Because with the evolution of people and the change in, if you're moving from one physician to another physician and that physician isn't seeing you, or they're seeing you once in 5 years, they are less likely to even consider offering you something like that. Right? So it's really about building a relationship. And I am almost sure that over time, you will be able to develop that type of relationship. Yeah? So I hope that answers your question.
Okay, and thank you very much. Last question, because we have...
Okay,
time.
and good night.
Good night.
To the panel of the insurance. He mentioned that, people paying a premium, and he also mentioned you put up on the screen 5 myths that why people do not trust insurance. In the case where you went to your doctor, you personally paid the bills and you bought your medication, and then for some reason you went in 24 hours too late to the insurance to claim, and they tell you they can't honor it, but they continue to take your premium every month. What redress do you have?
Mr. Williams? That's for Mr. Williams? That's for me, I know. I'm only kidding. Let me make, on one of my slides, on more than one of my slides, I kept emphasizing one point.
Know your content.
Know what you have bought. That is the number one reason that people have problems with claim settlement. It's the number one reason. Because you go and you buy. Let me give you a quick example. You buy a nice car and you say, I want comprehensive insurance. What is that? What is that?
The thing for new cars.
Oh, really? But I'll tell you this. Each and every one of us sitting here have in our minds something that represents. That's not on your claim form. That's not on your policy document. You hear what I'm telling you? But guess when you're going to find out it's not there? When you get licked up. You're going to suddenly discover that the thought I had in my mind for comprehensive insurance is not what it is. And then guess what you're leaving saying? The thief, the this, that, the other. Right? Know what you have bought. Going back to the time, most policy documents will tell you that you need to submit within a particular time frame. Right? Most people ain't paying attention to that. Most policy documents will say, you have 30 days, if not it lapse. But you want to arrive 60 days and say, you thief me. Right? Know what you have purchased. I could only answer you that way.
Okay, well, I think we have come to the end of our session. I'd like to thank each and every one of the discussants together with the main presenter. And let's give each of them a round of applause. And thank you very much. Mr. Chairman.
Thank you very much, Vaughn, and thank you very much, audience. We've come to that part of the program which says closing remarks, right? No. 7 p.m. to... Okay, so I'm a little ahead of myself. Anyway, so I think we've had a very educational and enlightening session on risks and mitigating risks, particularly from the insurance side. I myself nearly had an incident coming here this evening where I might have had to invoke my insurance policy. I'm in the lane to turn into the entrance to the Radisson, and there's a guy to my left, and there was a bus in front of me also coming into the Radisson, so I let him go ahead. And as I got a free passage to come through, I accelerated. Next thing you know, the man on my left is veering into me. And according to Paul Keems Douglas, he missed me by a He made me exclaim, WTF. Watch this fool. I hope he would have had adequate insurance. But yeah, it's not easy. But in the interest of time, I want to thank the presenter. As I said, it was rated PG. And indeed, it was a bit of guidance for parents. And I know in the audience, there are many parents, there are many future parents. And on that note, I want to ask if there's anyone here who's under 20, by a show of hands. Under 20. Right, so we have 2, right? So I want to say that both of you, right, are probably in the best possible position tonight in terms of the education and the information which has been given to you, because the earlier you start, the better you will be in the long run. Right? So that is all I will leave with you. And the second thing I want to leave is for all those who are parents, take the opportunity to pass on to your children from the minute they maybe reach secondary school, but latest, the minute they start working, that should be latest. To start, not training, but sharing with them, right, the benefits of planning early and particularly planning for their retirement. It will be very beneficial to them and to you in the long run, because sometimes parents have to bail out kids, and it's not a good thing. So again, thanks very much to the moderator, the presenter, and the discussants. And we move on to the second section, which is rated Emmy. Well, it's Michael Archibald who's the presenter, right? But actually, I mean, it's really not just for matured audiences, but for maturing audiences, those who are under 20, under 25, under 30, it's for you. So I'm sure it's going to be just as interesting as the previous one, hopefully a little shorter. Right? Hint, hint, hint. And to tell you more about it, I hand you back to my partner and friend, Vaughn Braffett. My apologies. My new partner and friend, Randy.
Right, session 2. Hopefully sweeter and shorter. Rising above the storm, how to recover from financial setbacks. Personal lives, you have some of the things that was touched by Mr. Gittens. Death of a loved one, loss of a job, etc. You also have the systemic. If you remember, the disappearance of Capital Bank, the near disappearance of Grenada Building and Loan Association, the absolute disappearance of Clico, Bico, and the vanishing act known as SGL Holdings, Inc. And you have the actual storms. Did you know that we're likely to be impacted by some cyclone type thing once every 5.65 years, apparently? And we will experience hurricane type winds for at least a few hours every 29.40 years. And we would be hit by a direct major storm once every 49 years. So it's not a matter of if, but when it happens, what do we do? Our presenter this evening, our main presenter, has worked in the banking industry for 39 years. He has been across the entire spectrum, from teller to CEO, managing director. He has worked in many jurisdictions, locally, regionally, and internationally. Grenada, St. Vincent, Guyana, Trinidad and Tobago, some stints in the US and England. He is more than qualified, more than experienced to give us a few tips on how to recover from financial setbacks rising above the storm. Put your hands together and help me welcome Mr. Michael Archibald.
Thank you for that introduction, sir. I can promise you'll be shorter, not necessarily sweeter. Good night, everyone. My area of focus tonight is the role of financial institutions in promoting and sustaining economic growth in an environment where personal finances and personal incomes are vulnerable. I've also been asked to touch very quickly on the Eastern Caribbean Currency Union financial system, on financial services and products that can assist individuals and businesses, and finally, how the Insurance Act and Banking Act protects insurers and depositors. I said not quite as sweet as the first half. My friends, we live in a civilized but uncertain world. And in an uncertain world, civilized societies have put in place constructs and institutions to protect prosperity and enhance economic growth. Two critical institutions that aid in that regard are banks and insurance companies. Two critical institutions, banks and insurance companies. Now, banks are the primary places for deposit income from employment, and they have, as a mandate in law, the safety and protection of the funds they hold in trust. All your funds. They have a mandate in law to protect your funds. They also act as the primary intermediary for the exchange of goods and services, domestically, regionally, and globally. Now, without a sound banking and financial system, commerce and trade would not be able to take place as we know it, and the inequities between the haves and have-nots will balloon even further out of control. The knock-on effects would be a destabilization of national economies and a breakdown of law and order. It is therefore critical that the resilience of the banking sector be and remain a priority against the vagaries of these external shocks that we've been talking about, such as hurricanes. Likewise, in a climate-challenged world, we've been talking a lot about hurricanes in our part of the world, and in particular our region, where hurricanes have become more frequent and they have become more powerful. Insurance remains one of the only risk-mitigating instruments against these threats. And we must continue to stress every day that the changes in climate that we are seeing were not generated or caused by us, but by the more developed world. But they have left us in the front line of that very, very dire confrontation. It is therefore urgent for our own sustainability as small island developing states to ensure that we are not locked out of the insurance risk pool due to our specific tempestuous circumstances based on our geography. We, of all people, do recognize the increased risk due to climate change and the recent catastrophes in Barbuda, Dominica, St. Martin, and Puerto Rico in 2017, all of them in 2017, and most recently in Abaco and Grand Bahama Island in the Bahamas. We recognize them, but insurance cannot be allowed to get too expensive for the ordinary household. These events set these islands back billions of dollars and a few decades of development that no coverage can adequately address. And sometimes I am not a defender of our local governments in this part of the world, But sometimes when we discuss the accumulated debt of these governments that they have accumulated vis-a-vis GDP, we sometimes forget that part of that accumulated debt is as a result of borrowing and spending due to some of these hurricanes, and we just need to bear that in mind. Now, notwithstanding, and given the fact that the world is on track for another 1.5 raise or increase in temperature, these risks that we're talking about have become more urgent and must be on our agenda for all of us in the Caribbean. And I think Mr. Phillip here made that very, 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 very clear. Climate change has our small island states moving from drought to floods, from fires to hurricanes in a 12-month cycle, on land masses that are too small to recover without adequate risk insurance. It is against this background that the Caribbean and the Eastern Caribbean Currency Union financial system, including banks, etc., insurance companies, must become resilient as a matter of urgency. Banks play another pivotal role in the recovery effort by being resilient themselves to these extended shocks. Not only we have to be resilient, the banks themselves have to be resilient. After a major disaster, for instance, the recovery of the domestic financial system is critical to maintain peace and security at a time when people are frightened, when people are shocked, and people are in survival mode. It, therefore, is critical that banks are able to reopen in short order to provide people with access to their money. In the Dominica Hurricane Maria disaster, it is believed that had the banks opened sooner, coupled, some believe, with stronger national security, the vandalism and looting that went on there and the length of time that it went on may not have occurred. While in the case of Grenada and Hurricane Ivan, the banks opened somewhat earlier, which allowed for access to the money by the citizens and therefore mitigated those very difficult circumstances. Banks themselves, therefore, need to have robust business continuity policies and procedures so they can restart operations in the shortest possible time. Notwithstanding the short-term need for cash and capital evident after external shock, banks must make sure that they have sufficient capitalization themselves to withstand their own financial shock. Because after a major event, there is a natural expectation that delinquencies will spike. Recovery will be slow overall, and therefore banks need to have sufficient cushion on their balance sheets to absorb the near-term and sometimes long-term losses. And I see Mr. Johnson nodding his head. He's well aware of what we are talking about here. It is important because if banks tighten lending after a major event, that has the knock-on effect of prolonging misery and by extension prolonging recovery. People will need access to capital to rebuild their homes, to rebuild their businesses, and to rebuild their lives. If credit conditions tighten too much, that much needed inflow of credit into the system is stifled, much like the stifling of blood to the organs and blood of the human body, with similar results. It therefore must become part of banks' strategy to ensure that they are, one, properly capitalized to withstand expected losses from an exogenous shock. Two, they have an adequate liquidity framework in place to ensure that it can meet the increased demand for liquidity from its depositors, because everybody wants their money at that particular time. And thirdly, that they have a robust credit risk framework in place that have policies and procedures for remaining active post-disasters in a riskier, much riskier environment. It is therefore safe to say that an insurance and banking industry that puts in place policies and procedures to deal with major events are the lifeblood to the resilience of any nation in the currency union and critical for recovery after such external shocks. Insurance risk must, of course, be priced properly for this new dispensation, without excluding the most vulnerable in these small island states. Now, active post-disaster claim processing, my friend again, and payouts on adjusted losses either to the banking sector, if assigned, or direct to policyholders helps to jumpstart the economy and jumpstart lives and helps to jumpstart the recovery process. However, it is the banking sector who must go the distance by enabling liquidity into the market without overly tightening credit conditions. Sir? Right. Just a comment on the Eastern Caribbean Currency Union, as I was asked. As you're all aware, the ECCU, the Eastern Caribbean Currency Union, is a grouping of 8 islands in the OECS who share a common currency, the Eastern Caribbean dollar. The currency union ensures stability of the domestic and international trade for the participating islands, and the importance of this cannot be overemphasized. The EC dollar has been pegged to the US for its entire existence, more than 40 years, and has never been devalued. That is a testament to an abiding principle of cooperation among participating countries, governed by the monetary councils consisting of the finance ministers of the islands and operationalized by the Eastern Caribbean Central Bank through the Treaty of Bastille. The supply of money is centrally managed by the ECCB throughout the currency union, as well as macro and microeconomic indicators that may affect or drive monetary policy. The central bank also has direct supervision of the commercial banks in the currency space to ensure the safety and soundness of our financial system. Within the currency space of the Eastern Caribbean Currency Union, insurance represents the premier financial product for resilience. The premier financial product for resilience. And many of the different products were already listed here, but I would just name one or two. Homeowners insurance, for instance. This is a must for all dwellings and must be insisted upon by mortgage holders. Homeowners must also be cognizant that valuations vary from current valuation to the replacement cost values. Insurance coverage, in my mind, should be sought for the replacement cost of homes, and I'd appreciate your thoughts on that, sir. Experiences coming out of recent disasters in the region have shown that underinsurance has been a major problem, and whenever we have one of these hurricanes, most people's homes are undervalued, and I think Phillip went through the problems that that creates. All perils insurance. Businesses need coverage not only for fire, but for all perils, including flood damage. Again, recent experience has taught us that although some businesses were spared structural damage, they were flooded out. Stock insurance is critical for the replacement value of inventory from damage due to natural disasters. Loss of profit insurance, workmen's compensation. These are all products that are not commonly exploited by businesses in the region, and they must be encouraged to do so. In the aftermath of a national disaster, business recovery will take time. Severance payments to employees due by law foreclosures can significantly hamper business recovery, as these outflows are needed to restart production and to restock. Loss of profit and inventory is another critical cash flow needed for resilience, not often in place. And again, this is something business persons, as well as individuals, must begin looking at insurance as an investment in recovery rather than an operating cost. And I want to repeat that. Business persons, as well as individuals, must begin looking at insurance as an investment in recovery rather than an operating cost for the business. And given that we are having more hurricanes and more powerful hurricanes more frequently, we have to start looking at it like that and change the original mindset in which we looked at it as an operating cost. The insurance industry and banking industry are two of the most regulated industries in the ECCU. There are specific legislations which govern the behavior of players, as well as enshrine certain rights insurers and depositors have under law. These industries are regulated and have their own specific regulators that are tasked to ensure compliance with the relevant laws in the public interest. I will mention here only the oversight and inspection of banks by the central bank, mandated deposit reserves, directives regarding directorships, reporting requirements, and limits on share ownership and the size of credit facilities in relation to capital as a few important regulations. Regarding insurance companies and credit unions, oversight and inspections by GARFIN here in Grenada, and reserve requirements for insurance companies and specific regulations and standards regarding credit unions all contribute to improving the strength and resiliency of the financial system. I said it was going to be short, and I close by reminding all that we are on the front line of climate change. The increasing frequency and destructive power of tumultuous weather systems we face that result in such massive devastation. It is incumbent on all of us in our various capacities and functions not only to do all we can to ensure the increasing stability and resilience of our financial system, but also in our public and private spheres of influence to educate all that need such education. Thank you for your patience.
Thank you very much, Mr. Archibald. So as we continue, we have 3 discussants on the table, and each person is going to speak for 5 minutes on the topic because we want to leave a few minutes at the end for questions. At the far end is Mr. Billy De Roche, who is the manager of retail banking, CIBC First Caribbean International. And next to him, Mrs. Kinna Marrast-Victor. Did I pronounce that correct? Yes. Attorney at law, acting magistrate. And next to her right, Mr. Denis Felix, who is the acting director of GARFIN. So to start things off with our discussants, I'll call Mr. De Roche to the microphone.
Pleasant good evening to everyone. Special appreciation to the team at ECCB, Valine, Linda, and to the wider ECCB for hosting such a vibrant program year on year. I'm aware that this program has been running for the last 22 years. Congratulations. I know that the moderator indicated that I have 5 minutes. I prepared a presentation for 10 minutes. So I would really like to ask for your cooperation in that regard, but I'm going to try to deliver in 5 minutes. My focus today is on the products and services to assist individuals and businesses to recover from disasters or other external shocks. And in doing so, we focus on several products that falls in the category of recovery: mortgages, personal loans, business loans, insurance, and consolidation loans. Now, how do these products help you to recover in times of disaster? A mortgage will help you to rebuild your house or restore certain parts of your property, improve on your houses, or even expand. People from time to time take the opportunity to expand on their house at the time when they need to do major renovations. Personal loans assist you with replacing the items that you may have lost in your house. Hopefully you may have had insurance, but you'll hear from Mr. Gittens what percentage of people was not insured. Properties were not insured. So just imagine, property is not insured. What about the contents of that property? In most cases, if you look at the statistics, I'm sure the percentage is much higher for uninsurance, for items. Personal loans allow you to be able to replace those items. Business loans help you to restart your business or restock your business. Insurance, I would not spend much time on it because I know the team on my right spoke passionately about it, and we understood as much as we could from insurance. But it does help you to recover losses. And in recent times, suffice it to say that the banks saw it necessary to offer to all our customers as an option. Home insurance, we heard Mr. Archibald mention home insurance is one of the most critical insurance that you need to have in recovery. Auto insurance and group creditors life insurance as three main products. Banks now offer it, financial institutions now offer those types of products. What about debt consolidation? Now, in times of recovery, one may have several facilities. You may have a mortgage for your house. You may have a vehicle loan. Your daughter or your son may be studying. You may have a student loan for them. At that point in time, you may be paying several installments towards these types of facilities. Debt consolidation offers you the opportunity to bring all these facilities under one umbrella. And what it does, it offers you several benefits. With these facilities under one umbrella, you're allowed to probably extend the term for a longer period, thus reducing your monthly payment. So you now have one monthly payment. Most people become very creative. They ask you at that time to adjust my rate to the rate on your mortgage. Financial institutions listen to our clients, and we work well to assist them with achieving those goals. Some other products that we offer and how it assists in times of disaster, we refer to these products as contingency products. Line of credits, overdraft facilities, credit card facilities, deposit accounts, or savings account. These type of facilities, especially the line of credit and the overdraft, allows people to draw on these facilities almost immediately. So it helps you with your immediate recovery. So while Mr. Gittens is processing your claim and has to send an adjuster to your house, or you may have applied to the bank for a loan, but because of the number of persons lined up for loans to repay, you already have that facilities available for you to draw for immediate recovery. Credit cards, it offers you emergency funds. You have your card already arranged with your limit. It's easy to use that card to travel if you have to travel, or to access cash instantly to rebuild. Imagine in times of disaster, you may sustain injuries. How do you pay for those injuries? Now, you may need to fly out of the country in order to seek further medical attention. The bank is taking its time to deliver on the loan. The credit card allows you to book that flight instantly. And the first available flight out of Grenada, you're on that plane. Deposit accounts, savings. We always hear that we are not making enough money, how do we save? But businesses as well as individuals need to come to the reality that you must put aside at least 10% of your salary or 10% of the net profit of your business in a savings. It comes in very handy at the end of the day. And what does these products, these contingency products, do for you? It gives you a peace of mind. So a major disaster is coming. You have those facilities available at the bank. There is no need to worry. The services, I'm also asked to speak on the services that financial institutions offer that would help you to ride out the storm. Your people and technology is the most important aspect of services that you will offer. Advice and consultation. Many of us may not know that the banks and financial institutions, credit unions, etc., offer you free advice and free consultations. We must take advantage of it in order to make smart decisions, in order to build relationships with your banker or even your insurance companies. Imagine you can take your phone up and call a banker or call an insurance advisor and speak with them on the various type of products and services that they offer and how it would benefit you for the future or in times of disasters. Internet banking, it helps manage your payables. Today, I can sit at my desk and pay all my utility bills in 2 minutes. And if you put that into perspective of what happened years ago, you would have to go to a bank ATM machine to withdraw the cash and walk to each and every utility company, stand in a long line to pay those bills. Internet banking gives you that opportunity today to be able to pay those bills within 2 minutes. E-commerce. E-commerce assists mainly businesses with managing their receivables online. The payments that you receive as a business is in real time. It hits your account instantly. The way it operates and functions is very simple. Most businesses these days have their website with their products and services advertised. What we do is that we include our platform, just a little portion with the First Caribbean logo on your website with payment written just at the bottom. So you have identified the products and services that you would like to purchase from that company. You're ready to make your payment. You click CIBC First Caribbean payment method, and that's it. With the blink of an eye, your payment goes through. That makes it very easy in terms of the solutions that you offer in the times of disasters. E-check, payment of salaries to employees and suppliers that do not have account. We understand that some people may not have account. We don't understand why, but they just don't have account. E-check allows you to be able to collect your salaries, to be able to pay all your suppliers, even if they don't have an account. It's simple as a credit card or a debit card. It's plastic. ABMs gives you access to cash, gives you the ability to deposit. So you do not necessarily need to go into the bank, especially in times of disaster, when the bank may be reduced in terms of size, because part of your contingency plan, as Mr. Archibald alluded to, banks having to establish contingency plan to be able to restart and put monies back into the business sooner. ATMs are very resilient to disasters, very, very resilient. I mean, after all, it's a machine. Now, in conclusion, and I'm sure I would have achieved that 5 minutes, Mr. Moderator, to recover, and Mr. Archibald said it, you need financial institutions, you need insurance companies, you need the products and the services that we offer. But it should not only be about recovery, it should also be about sustainability. And to sustain your business, you need people. You need the right people to make the right decision on the right policies, the right structure, and also technologies. And as you would have seen in the previous slide, technologies would have made a lot simpler. It would have saved your time, it would have saved your money. Thank you.
Well done. Well done. Thank you, Mr. Diroche. And now we call Mrs. Kinna Marrast-Victor, attorney at law, acting magistrate, who would give us some legalities in terms of recovering from financial setbacks.
Thank you, Randy, and good evening, everybody. Okay, I'm just going to follow on from what Mr. Archibald spoke on briefly with regard to the bank. I've been asked to speak on the Banking Act and how it provides protection for depositors and creditors. Now, the Banking Act has over 100 sections, and I have 5 minutes. So I am going to be very brief, as I intended to in any event. We heard Mr. Diroche speak of the many products and the services that can provide assistance when there's a need for recovery, when you're recovering from whatever peril that might befall. And all of these services are great, but there's a need, and Grenada has very recent experience with Cap Bank. And we all know what happened there when there was an entity that attempted to provide banking services unsuccessfully. And today, I don't think it's completely resolved. From time to time, you hear Cap Bank come up and you see on the court list Cap Bank's name is there as a defendant or as a claimant. So the Banking Act that was passed in 2015 repealed the old Banking Act of 2005 and expanded particularly the supervisory and the monitoring provisions. And to start with, I'd just like to mention the licensing provision that is stipulated therein. While the old act had the minister as the person who granted the license, the new act ensures that this ECCB, the central bank, and it just makes sense that the central bank as a regulatory entity ought to be the one to have oversight over who gets a license. And the application process is quite stringent. And let me just highlight that we're hearing about the know your customer that the banks and the financial institutions must undertake. And when I read the sections that dealt with the application process, I thought, well, this is ECCB getting to know their customer as well. Because the shareholders, the persons who want to get a license, they too must show that they are fit and proper. They too must show that they have what it takes to operate a bank. They must provide the projections and the proposals. So I can't submit an application. I have no clue about financials and banking and so. But whoever comes to ECCB for that license must satisfy ECCB that they know what they're about, so that you have confidence in the banking system that when this bank opens its doors, the depositor, the creditor, the man on the street has confidence that he or she can walk into the bank and engage in business comfortably, knowing that this entity is what it purports to be and that it can provide the services and not run away or walk away or the money disappears. The Act also looks at the beneficial holdings. So you have the shareholders, whoever owns the bank, they too must be good and proper, fit and proper persons is the language that is used in the Act. So you can't be a bankrupt. You couldn't have committed theft and convicted for these offenses and then want to be involved in the banking industry. If you are, then the confidence that the public would have in you would be very low. That could compromise to the general banking system. So we have that sort of provisions therein. Mr. Archibald mentioned the capital and the reserves that are necessary to be maintained by the banks. In the Act, I noticed that it's $20 million that must be maintained by a bank and other financial institutions at $5 million. And this $20 million is not just that they must say they have it, but the ECCB takes a deep and an involved position in monitoring and supervising and ensuring that the reserve is maintained, that this paid up capital, that it is kept there for the purposes that it was meant to be. The supervisory role of the ECCB, it is really extensive, and I guess it works well not just for the banks to encourage them to ensure that they are in compliance with the Act, but also to ensure that you have public confidence in the banking system. If we're not confident in the banking system, we jokingly say, well, you're going to put your money under the mattress and so, but we're not going to do that. Most of us are not going to do that. We are going to be seeking out the banks, the financial institutions. And so the supervisory role that the ECCB plays is truly commendable, not just as in the Act, but I imagine that in practice as well. I found it interesting that the ECCB has, so if they find an institution that either is in breach of the law or is not in compliance with their standards and the conditions of the license, it isn't just a shutdown position, but there are remedial steps. The ECCB literally walks with the institution to see that they get back on track. And the very last remedial step was a revocation of the license. And that was after taking a number of steps to walk with that institution and get them back to where they should be. And remember, the ECCB is doing that. You have depositors, you have creditors, you have persons who have mortgages. And the question is asked, well, what happens if this institution falls through? What happens to my property? What happens to my life insurance? Is it compromised? Is it tied up in court and I can't transact with my property? So all of these measures are ensured that would ensure that you have confidence in the banking system, that the deposits are safe, that the persons who want to get involved in credit transactions, that they can do so and not be too risk averse. But you can know confidently that you can reach out to an institution, that you can get a loan from them, that you can use your property that has sentimental value, that came from your great-grandmother and been in your family for 50 years, that you can use it, and with confidence, knowing that when you are finished and you've paid off with that institution, you can have a reconveyance and you walk away. The governance structure also is another section that an entire part of the Banking Act, and that is meant to ensure that it's not a susu that is being run, but that whoever steps forward and you have a bank, that it is properly governed. With any institution, if you do not have a proper structure, it's going to fall through. It's not if, but it's when. So for the Banking Act and the importance that the banking industry plays in our society, I mean, think of how often you use your credit card, your debit card. Right now in the supermarkets, we're using it. We're for every transaction. Just now the man on the street with selling fudge, he may be walking around with his machine and you can pay with your debit or credit card. And so the supervisory role, the governance structure provisions are all within the Banking Act to ensure that our banking system isn't compromised and our depositors or creditors can bank with confidence. Thank you. From within.
Thank you, Mrs. Victor. It's really refreshing to know that ministers cannot grant license for banks anymore. And we've climbed down from that level of madness. It's good to know. The credit unions also play a very vital role in helping persons to restart. I remember after Ivan at the credit union where I worked at the time, when we got to work the first day, we met a note that was slipped under the door, and it was a loan request in 5 lines. And you know, we laughed. We thought the member was just baffled and confused after Ivan until he showed up the next day to sign his loan application. He was dead serious. It is that necessary that the institutions like credit unions are able to react when you have an external shock. The body responsible for monitoring credit unions and ensuring that we're in that position is GARFIN. And we now invite the acting director of GARFIN, Mr. Denis Felix, to make his comments.
Thanks. Thank you, Chairman, and good night to everyone. This is my position, the perspective, this is a different perspective. We've heard from the service providers, insurance, and so on, and banks. So this is a different perspective as regulator. And the perspective is protecting the public's interest. So I have indicating here that protection, public confidence, and financial stability, they are synonymous. If we protect your investments, then we are actually going to stimulate public confidence and ensure financial stability. When one makes an investment in whatever form, be it a credit union, an insurance company, commercial bank, you expect that when you're ready for those funds, that they are available to you. And you know that in past years, we've had some difficulty with that. So basically, I'm going to try to be brief, but this is the outline of my presentation, because I need to give an insight with regards to how GARFIN carries out its work, so that you get a feel that actually the confidence that is intended is maintained. There are 3 regulators in the ECC region. We know that, right? 3 regulators. The Eastern Caribbean Central Bank, and they're responsible for the commercial banks. We have the Eastern Caribbean Securities Regulatory Commission. They're responsible for securities business, so the trading of treasury bills and so on. They oversee that. And we have the Grenada Authority for the Regulation of Financial Institutions, or GARFIN. GARFIN is responsible for the non-bank financial sector in Grenada. And when we speak of the non-bank, we're not just referring to credit unions, referring to insurance companies, my good friend here. The GDB, previously, before 2007, the Development Bank was not regulated. The Act now is vested, placed under GARFIN, so we provide oversight. Micro-lending, the Fast Cash and Axel, right? They are registered under the Money Services Act. Money transmission, the Western Union, MoneyGram, they were also registered there. The building and loan, building society, the building society previously as well was not regulated. Since 2007, that has been placed under the GARFIN Act. IBCs, international companies, we don't have a lot of that. We don't have no offshore right now, but we have a few IBCs. The friendly societies are the age-old things that our grandparents used to participate in. We still have some on the books. We are in the process of closing them off, but we still have some there. And we have a thriving savings activity in the schools. There are about 77 schools with more than $1 million in savings. So the kids are actually contributing to the financial system. So GARFIN started its operations in 2007, February 1st. There is its own act, an act of parliament. GARFIN has its own board of directors, and the act specifies who is eligible to be a director. All right, so it's very specific there. We administer 12 pieces of legislation, and these are they're listed here: the Insurance Act, the Building Societies Act, the Friendly Societies Act, the Cooperative Societies Act, only as it relates to credit unions. So we have a registrar for cooperatives, that is the small businesses and so on. And then we have the Money Services Act, the Development Bank Act, as I said, and those in red, those pertain to international business. So we have no offshore. There are some IBCs, that is international companies, but in December of last year, December of 2018, the Parliament took the decision to repeal these pieces of legislation, and a transition period of about 3 years were given. So with effect from December 2018 up to December 2021, that's the transition. So after 2021, most likely, and I'm saying most likely, because you never know what happened during that 3 years, we may not have any IBCs on our books, right? GARFIN's objective: financial stability and public confidence, primarily. If we do our job well, those are the expected outcomes. Ensuring public confidence and promoting the understanding of risk associated with doing business. That is, ensuring that the public understands risk related to business decisions that they make. So the end result is that they should they would be able to make better business decisions. Okay, I should be back to this. So we spoke about losses. All right, people remember those? British American and Clico. Those were significant losses. Very recently, the judicial manager for British American made some payments to the annuity holders, that is, those people who made pretty large investments. But to date, these investors only received in return about 14% of the total investments that they made. So you receive basically $14 on every $100 that were invested. And there's uncertainty about the balance. With regards to Clico, after all these years, there still has not been any payout to investors with Clico. So we have uncertainty there. We had Nalgico. It was a very small insurance company that collapsed. But you remember SGL? SGL was not regulated, right? Can this happen now? We should not have any financial institution in the country now without a license. The GARFIN Act was amended in 2013 to capture any financial entity that is carrying out business where we do not have a specific piece of legislation, and there's a requirement for a license. So if GARFIN was around, then SGL would have been required to have a license because even if there's no specific legislation to deal with it. In fact, I remember I had a call from someone from Trinidad not too long ago, and they said to us, we want to come to Grenada to set up the fintech operations. So we want to get involved in the blockchain arrangements. And we said, well, this is new to us. We have no legislation to deal with this. We ourselves have to learn it before we can respond to it adequately. And the response was, well, we're coming. And the private sector going to do what the private sector has to do. And then the public sector would do what the public sector has to do. What I understood by that is that he's prepared to come to Grenada and start his business, and the public sector would respond or react to it. Well, he came to Grenada and he couldn't start business because there is a piece of legislation that says, even if we do not have a specific piece of legislation there to govern what he does, you must get a license, right? So he had to come to us and get a license. And we have an arrangement with the ECCB, and within the ECCB at the moment, that we would not issue any license with fintech operations. And the offshore. A number of credit unions, we lost credit unions, right? Randy? Yeah, we lost some credit unions. Interestingly though, those were smaller ones, and even though they had operated deficits on the books, when they were merged with the larger ones covered the deficit. So that was, I think, was very good in that the members did not lose any of their investments. The building and loan, they had their difficulties as well, but it was stabilized. We had a judicial manager there. Then about 3 years thereafter, it was returned to the membership. So it is being operated now by a board of directors and the membership. They have made pretty good progress. They're giving loans now. They are in a position, not that they have covered all of their operating losses, but they are able to some extent to guarantee the investors, the members who had the funds there dollar for dollar. And I think that in itself is significant, because when the association was restored, members' investments was what I think only 20 cents, right? So they have, although they still have the operating deficit on the books, but the board is able to guarantee the existing members dollar for dollar on the investments. So how does GARFIN carry out its work? I need to, offsite. We do a lot of offsite work. That is, we can sit at the office and we can analyze what happens with an insurance company or a credit union. How do we do that? We get monthly reports from credit unions. We get quarterly from insurance. We get annual from pensions and so on. And they are on prescribed forms. So we're able to sit at the office and look at the data, analyze the data, see the results, see the trends, see the problems and so on, and then respond as we see fit. So we're able to do prudential meetings. Prudential meetings, if we find it necessary, if there are deficiencies, we could call in the board and sit and talk to the board about the problems. Or we can plan on-site inspections. We also consolidate the data, because we talk about financial stability. So the data is consolidated. If the Ministry of Finance needs the data, they can get it. The ECCB can get it. We even send it back to the industry as well. Then we do the on-sites, and our on-sites are primarily associated with risk. So the larger the credit unions, or the credit unions that we've identified difficulties, or the insurance companies, they will see more of us, right? So our team from GARFIN can go into any one of the institutions, ranging from any time frame from 1 day to 2 weeks, depending on the issues have to be dealt with. So we actually go on site, we assess, we collect data, we assess the information, and we take action accordingly. And of course, follow-ups is important, because once you identify issues and you make recommendations, then you follow up to it to see progress. Compliance is significant because, so we look for compliance with the Act, with the AML procedures, prudential standards, best practices. Some data on the sector that we regulate, credit unions. I put this here, 2007. 2007, the total assets, that is consolidated data, total assets was $240 million. August 2019, $963 million. So the sector has grown. In fact, in the last 5 years, the sector has doubled its assets, moving from about $500 million to 963 million. The insurance companies, 26 companies, 408 million. Money transmission, money is coming to Grenada annually. Annually is about 150 million. Leaving Grenada is about 40 million, 48, thereabouts. Pension, they're about 45, $206 million assets. The building society, well, this is net of the losses, right? So it's about 17 million. The GDP has been doing pretty well. I think we have a former chairman here. The framework was, you laid a very good framework there. We just did some work there, and the the development bank gets very good commendation. $88.9 million, and the schools, 77, 1.6 million. So what are we doing differently? Our work is centered around risk. So we have developed a risk-based framework. We got some technical help to do that over the years. And the specifics to that is that there's the reporting, there's the ongoing monitoring. That is what we do off-site. There's the on-site inspections, prudential meetings, annual audits, and general meetings in the case of credit unions, and we have very good compliance there. Insurance companies, in fact, insurance companies, if they did not audit on time, they pay a penalty of $200 a day, right? We don't have that, that kind of penalty in credit unions yet, but we get very good cooperation there. We're able to improve on our prudential standards all the time. So best practices, we're constantly improving on that, because as credit unions grow and develop, as insurance companies become more challenging, you have to respond to what's happening in the industry. So we have to constantly look at updating our indicators, best practices, the legislation as well. From time to time, we do amendments. And this is very important. If there's one thing we should do well now, is this point here: pledge assets to cover insurance liabilities. Before the collapse of British American and Clico, I don't think this was very well established. And so when these companies collapsed, we had no assets here, very little assets here to cover the liabilities. Now it is legislated that every insurance company must pledge or vest with the regulator sufficient assets to cover the liabilities. So every time you insure a car, a house, life insurance, every 3 months, those liabilities are assessed, and the company then ensures that it places enough assets to cover those liabilities with the regulator. And it could come in any form. It could be land, buildings, cash, bank deposits. But at the end of the day, if we have a collapse of any insurance company now and we are doing our job well, we should have sufficient assets under our control to cover those liabilities. What is that going to do? Reduce impact, right? I would not say eliminate, but it's going to reduce the impact on the public. So we think that having assessed what we do over the years, because they say GARFIN been around since 2007, so we constantly review what we do, And so we believe that we contribute to financial stability. We haven't had any failures during that time. All right, so that's good in itself. We think we get very good compliance from the sector, very, very good compliance from the sector. There's an increased level of safety and soundness in the sector, be it insurance, be it credit unions. And people ask us all the time, is a credit union safe? Yes, the credit unions are safe. Why do we say that? The credit unions are meeting most, if not all, of the prudential requirements for capital, liquidity, delinquency, and so on. Of course, you have little challenges, but in terms of the level of compliance, they're doing pretty good. There's a cycle of on-site inspections, right? And in fact, we're even developing new procedures for SIFIs, systemically important financial institutions. But we get very good support from the government. So whenever you need legislation to be passed, all right, we think we get that done reasonably in a reasonable, timely manner. The reporting, 100%. All right, every month we get a credit unions report. I would say sometimes a day or two late, but we get them. And that's important, because if we don't get them, it means that we are not in a position to inform ourselves well as to what's happening. So likewise with the insurance companies. And over the years, we've been able to improve legislation. So the Cooperative Societies Act have been improved. Maybe in the next few months, we should have new regulations for the credit unions. The Insurance Act, 2010, there's a new one that is being finalized now. So probably in the next year or so, we should have a new Insurance Act. So this is the point I made earlier, transfer of the assets and liabilities of the smaller credit unions. And it was interesting that the members there did not lose any investments, although these smaller credit unions had operating deficits on the books. I'm not sure if that's going to happen going forward, but what we try to ensure is that every credit union have sufficient capital, right, to cover any unexpected situations. The fact that we haven't had any failures and so on, we believe that the public confidence is improving, and financial performance, weak financial performance. Anytime we see losses on an institution's books, credit union, insurance companies, we become unhappy. All right. Anytime we see operating losses, so we would call that institution, and we'll take some measures that may require that institution to submit its budget and work plan and so on to show how they're going to address that going forward. All right, because deficits weakens the financial position of the institution. Some ongoing concerns. There's always room for improvement. So corporate governance, although that has improved significantly, there's still some areas that can be improved. Loan delinquency. We have a target of a maximum of 5%. So any institution that is, any credit union, for example, that is above 5%, then they're above the benchmark. So are they outside of the benchmark? So there's a concern there. We think it's deteriorating. All right. We think it's deteriorating. It's probably around 6% now. It used to be around 1 year ago. It was closer to 5%. Now it's just gone past 6%. That is on a consolidated basis. So it's an area we got to watch. The capital, we still have a couple institutions that not quite meeting the capital level. But what is important is that any institution that is not meeting the benchmark, we have a program with that institution for them to improve over time. And then from time to time, the international standards change. So we have the IFRS 9, IFRS 17, and we have to respond to that. Interestingly, when we audited, most of the companies audited and credit unions audited in 2018 against the IFRS 9. And the level of impact negative impact that we expected, I think we got a different result. So that in itself was good for the sector. All right. Customer complaints. I think we're starting to get some complaints now from the public on insurance business. All right. I think we're starting to get some complaints now. So, I think it's an area that we should try and nip in the bud before it escalates. The way forward, there's work ongoing now for a single regulator for insurance. Right now we have 8 different regulators in the ECCU. So each of the 8 territories have an insurance regulator. There's moves afoot to have one regulator, like we have the ECCB, one regulator in the ECCU for insurance companies, and eventually that would be extended to credit unions. So we'll have one regulator in the ECCU that is overseeing credit unions and insurance companies. But that has been on the drawing board now for maybe about 8 years or so, right? But we're making a little progress bit by bit. The risk-based framework that I spoke about, that is important, but we're still tweaking it to ensure that it's finalized, well documented across the board for insurance and credit union supervision. And there's always room for improvement of the legislation, various legislation. So I spoke about the Insurance Act that should be uniform across the ECCU. Hopefully we get that before long. We are developing work with stress testing, right? Stress testing for credit unions. We're gonna maybe in the next few months we should be able to do something for insurance companies as well, right? Stress testing. For the insurance companies, the parent companies, that's not new. Maybe it would be new in Grenada, but your parent company is really accustomed with stress testing and so on. Criteria for CFIs, right? Systemically important financial institutions. We have a credit union now that is over $400 million, right? We can't regulate the same way as the credit union with $2 million in assets. So we have to develop procedures to do that. And we got help from the World Bank recently. So we have a financial crisis resolution plan. Suppose our largest credit union, $400 million, have this difficulty, and we have this run on it, and because they cannot pay people their deposits. How do we respond to it? All right. We've developed a plan to do that, and there's always room for new indicators. All right. With credit unions, we once use Paul's ratios. We think most of those ratios now are no longer relevant. So we work in with CARTAC, and we hopefully would have upgraded or more relevant financial ratios. And then we say a good regulator, right? So that's closing. There must be some characteristics of a good regulator. What is a good regulator? A regulator that is effective, all right? So to be effective, you need to have good legislation. So it must be as up to date as possible. You must be able to enforce sanctions, all right? So if there are no penalties in there, so it cannot be very effective. It must be adequately funded. I think we're okay. All right, I think we're okay. There was a time when GARFIN operated on bank drafts, right? We're no longer in that situation. I won't tell you who pays the biggest contribution to our funding. Right? So you must be able to train your staff. You must get the support from the government, because that's where the laws are passed and so on. All right? And the infrastructure, right? We are the stadium. We are the stadium. We have a lot of space at the stadium. We are a good tenant with the stadium. The stadium is a statutory body, so we pay a monthly rent there. We're comfortable there, and we must respond with our IT as well. So we're constantly looking at that. So credit unions now start giving us soft copies of their reports, and it's integrated into our system. We're working on developing that as well. Very soon, maybe we may do it for insurance as well. So we have a consultant that is developing a system for us with IT. And finally, we say that a regulator, we must lead by example. So we can't just look for the regulated entities to do everything as we expect, and we don't respond in kind. Right? So we must lead by example. So the institutions that are required to do the auditing on time and so on, we must do the same thing. And GARFIN's audited statements and annual report is by law required to be tabled in Parliament. And I think we have a pretty good record of ensuring that every year, as a statutory body, every year, our annual report and audit statements are tabled in Parliament. There's also a requirement for the insurance for the regulator to produce an insurance sector's report, and that must be tabled in Parliament as well. And I suspect that the next sitting of the Parliament, both reports would be tabled. All right, so we try to maintain the same level of professionalism that we expect of the regulated entities. And I think this is a good note to thank you.
Right, thank you very much, Mr. Felix. Ms. Berkeley, we rent the room for the entire night, or? Right, so we're going to quickly probably take about 2, 3, 4 questions. Right. 2? Right. So we have time for 2 questions. And then anything else we need to ask any of the persons at the table, we can do so at the cocktail. They would be, I am putting them on point to be ready to answer questions. So we take 2 questions now, if any, on the floor. Going once. Right. Gone.
So should I ask a question?
Yeah, you can.
To the regulator?
Yes, sure.
Much of what you said, I heard equity built into your theme. But it appears that certain financial sectors have been a little treaded on. What do you think?
Okay, can you repeat? I didn't hear the last word, man.
I'm just saying that it seems as if your general theme was equity.
Yeah.
And I'm wondering what your thoughts are on the financial sector, whether it's being treated equitably with the other sector.
I think so.
Okay.
Right, next question.
Just wanted your thoughts.
Right, we have a gentleman to the mic.
Good night to everyone. My question is for Mr. Archibald. You made mention that the EC dollar is pegged to the US and that our currency is pretty strong. My question is, do you anticipate that if there is a decline or collapse of the US dollar, that it will have a similar effect on the EC?
That question is more for an economist. If there's a collapse of the US dollar, it affects everybody and everything because it's a world currency.
Yes.
So it will affect us also.
Yes, but the fact that we are pegged, that's the question I'm asking. Not all the currencies are pegged to the US dollar. Yes, they need the US dollar as a dominant currency, but because we are pegged, peg tells me that you're so attached that if something significantly happened to that currency, it should have a devastating effect on that currency that is pegged to it. That's my understanding. So I just need clarity.
Yeah, every move of the US dollar, the EC dollar will move with it because it's pegged, so it's tied to it.
Right.
So anything that happens to the US dollar vis-a-vis other currencies, because it's all in relation to other currencies, the same thing will happen to the EC dollar. How devastating or how big the effect would be depends on the size of the devaluation itself. Okay. So that's one can't answer it like that.
Okay, thanks.
Okay.
While I'm on my feet, I'd just like to ask another question. Based on the presentation that the regulator made, he indicated that the delinquency rate for the credit union is on the increase. And it's my understanding that there's the banks, as well as the credit unions, they're very liquid. So it means that there's a lot of money in the system. I also understand that there's migration of deposits from the banks. to the credit unions because the interest rate that they pay to the customers is more favorable. Now, if there's a heavy migration of that fund, it means that the credit union will be brought under a lot of pressure to do one or two things. Either eventually to reduce the interest that they pay on deposits, or they might have to compromise on the quality of the loans because they have to exist. So I think that might be one of the reasons why there might be an increase in the delinquency rate, and it might just go higher. That's my take.
Okay, well, I think that was an observation that you drew, but I think we don't manage the credit unions, right? We provide oversight, and so I would speak to what are the reasons for the as to and whether or not funds are coming from the banks to credit unions. What the statistics is, what the record has shown is that credit unions' assets have grown significantly, right? The contributing factors is a different thing, which I wouldn't get into. But I think our credit unions are pretty well managed. We got highly qualified, well qualified, and experienced directors and managers, right? You know the days when credit unions were managed based on voluntarism. We don't have any credit unions now that are based on voluntarism. So they've improved the management. I think the management are pretty capable of managing the operations. There is always challenges in the financial system, and the fact that we're monitoring the performance, and we can tell you that there's business growth in all of the key areas. The capital is strong in most of the credit unions, and where it is not as strong as it should be, as I said earlier, we have a program with that institution to build it. And so delinquency, the financial managers would tell you that there would always be delinquency, right? But the fact that it is identified at an early stage, and they are required, and we have this target, then every credit union should be working to bring it within that target, right? So to be forewarned is to be forearmed, right? The information is there; they're all aware of it, and we expect them to be taking steps to manage, just like any other financial institution.
Right, and also just to add a bit to that, the increase that is being spoken of is across the sector. So you do have large credit unions that are way below the 5% threshold. Yes? So it's very important to know. Well, very important. Yeah, it is. And when I say way below, I mean way below. 2%, 2.5, etc. So the increase we're seeing is across the sector. Part of the reason is we do have some decline in rates now in the market. The market is way more competitive. Credit unions have to change their risk appetite just a little bit because of the demands of the market. Yeah. Right. So those are 2 questions. Thank you very much.
Thank you very much, Randy and team. Michael, Archibald, Denis, Felix, Kinna, Marrast-Victor, and Billy de Roche. I think you've done a wonderful job. I won't ask the audience to vote for which was the better team, but I think both teams did excellent. So thank you very much, gentlemen and lady. And before I invite Valine Street to come and give the closing remarks, I just want to say that all those who chose to come this evening, I am not uncertain, I'm very certain that you've all benefited, that you're glad you came. I want to thank the ECCB for inviting us to this fete. You know I came to a FET, right? Well, financial empowerment through education. That's what we came to get, right? FET. And in fact, I believe Randy has invited us to a FET afterwards. He spoke of some cocktail. I don't know that the ECCB has one, but maybe he or the GUT is putting on a spread. So Randy, thank you in advance. So again, I want to say thanks to everyone for coming tonight, for participating. As I said, I'm certain we've all benefited. And I would just ask that you continue to pass the word along to the next generation, the younger ones, right, so that they will be better informed and be able to participate in FETs like this in the future. So thank you very much. And may I ask Ms. Valene Street? You know, Valene used to be my colleague at Republic Bank. But I can never forget Valene. Actually, she was Valene Street. Now she's Valene Street Victor. But when I came here in 2009, and Valene could probably correct me or set the record straight, I think during that year, Valene left the bank and went to ECCB. Now, she'll tell if the year is correct. But what I do recall is that she was the first person to leave Republic Bank after I came. So I don't know if it was something there, but I know we're still friends. So thank you very much, and over to Phillip.
Thank you, Mr. Johnson. Mr. Johnson has very, very good memory. And I didn't leave because you were coming. Before I do the closing, I will now invite our representative from the Communal Cooperative Credit Union to make some presentations. And yes, there is a cocktail after this.
There you go.
So the first presentation is to our first presenter, Mr. Phillip Gittens, Operations Manager, Antillean Insurance Company. Our second presenter, Mr. Michael Archibald. And I must mention that what we're presenting here this evening all came from our Financial Information Month partners. So thank you very much, partners. We're now going to present to the discussants. We're going to start with Mr. Louis Williams, Financial Comptroller, National Insurance Scheme. And we're going to move to Mr. Leslie Barry, Owner, Manager, Barry's Engineering Company Limited. And here we now invite Mr. Belmar. We now invite Mr. Felix, Mr. Denis Felix, Acting Executive Director, GARFIN. Mrs. Kinna Marrast-Victor, our legal mind here tonight. And last, but by no means least, Mr. Billy de Roche from CIBC First Caribbean. Thank you very much. Thank you, Ms. Montrose and Mrs. Berkeley. And now to my task. On behalf of Mrs. Linda Felix Berkeley, Country Manager, and by extension the Governor and staff of the Eastern Caribbean Central Bank, I would like to express sincere thanks to all our Financial Information Month partners for collaborating with us on yet another successful business symposium. The symposium has become the signature event for Grenada during Financial Information Month, and without you, the partners, the planning and execution of this event would not be possible. Special thanks to our chairperson, Mr. Keith Johnson, Managing Director of Republic Bank, Grenada Limited, our presenters, Mr. Phillip Gittens and Mr. Michael Archibald, the discussants, Mr. Alban Belmar, Mr. Louis Williams, Mr. Leslie Barry, Mr. Billy de Roche, Mrs. Kinna Marrast-Victor, and Mr. Denis Felix. Thank you to our moderators, Mr. Vaughn Braffett of RBTT Bank Grenada Limited, and Mr. Randy Frank of the GUT Cooperative Credit Union. Special thanks is also extended to our service providers, Mr. Richie Oliver and team of TNR Comms, Mr. Nigel Matlin and team of Aqua Design / Now Grenada, and the management of Radisson Grenada Beach Resort. Finally, thank you to you, the audience, for your attendance and participation in this year's symposium. Your presence here helps make this symposium meaningful and indicates to us that our FIM initiatives are far-reaching, which is one of the goals of Financial Information Month, and by extension, one of the bank's strategic priority of actively promoting the economic development of our member territories. Once again, I say thank you. I now invite you to join us at the Oasis Pavilion, where we can continue conversations over cocktails. The Oasis, right, so you go out the door and you make a left. I think we're going to be going through the restaurant. Or are we going? Right. We'll follow each other.